Would you like to come have some coffee and pie with me?
Hi everyone, if you are watching this, then I'm sitting on a sunny beach in Italy, and so we filmed a week beforehand. I've got David, our head of compliance, here to ask some long tail questions. Normally the format of the show is that we sort of talk over the last week, but with this being a week ahead of time, I can't really do that. So there's some burning questions that I think the crypto community, particularly in Australia, have always wanted to know around compliance. I think it's a bit of a shadowy, mysterious thing, the whole KYC, AML. There's like a, jumping on Reddit, there's like a undergoing sort of feeling that perhaps it's all ATO driven and it's just to get tax out of us, and that's certainly the case. But there's, I think room to explore and explain. And no one knows crypto compliance more than you. And so I roped you in for a coffee and a chat.
Thanks for having me, Mike. Yeah, there's definitely a lot of misconceptions about compliance. I think one of the first thing is compliance is not there to be seen as a blocker to the ecosystem or to slow you down. I mean, definitely if you're uploading an ID and we're trying to verify you and you hit a roadblock, getting a reject message isn't the nicest thing in the... Yeah, definitely. And there's definitely a process there. Unfortunately, it's just what the regulator requires, and you need regulation to build the ecosystem and for it to go mainstream. And I think one of the things off the back end of that is without a proper regulation and KYC for that matter, you can't get banks on board, and you can't really have a crypto exchange where you can't get banking.
Otherwise, it's a DEX.
Correct.
But it's really funny that you mentioned that, because we on board with a lot of partners. We're on board with banking clients, and we have to go through the KYC process, and quite often we get rejected for something, right? So we're something small, ID or Phil got rejected. So we understand the frustration, but it is sort of like a one and done, and it sort of needs to happen. Like you said, I think for growth and for adoption and mainstream success. And that's what we all want at the end of the day, right? We don't want this to be a flash in the pan. We want crypto to stay around for a long time. These are one of the see, I'm almost on the degen side. I was going to say, like, these are one of the evils we have to put up with, but it's not an evil. It certainly flies in the face of what Bitcoin and the open free finance for everybody is sort of like opposite of that. You're a crypto guy, so you have to see our side of things, right?
Yeah, definitely. So I think one of the common counter argument to verification, KYC in general, is in the spirit of crypto or blockchain, should be anonymous, should be free, away from the traditional banking ways of bringing your passport or ID and set up accounts and ask a bunch of questions. And I think to answer that quite openly is, we're not trying to spy on you. It's important for us to verify who you are so we can separate the people who are generally here to trade and invest in crypto and build up this, nice ecosystem that we're trying to create, versus those who are trying to do malicious acts or money laundering or scams.
Or being scammed themselves. That's why we've got the quiz at the front to make sure that no one is taking third-party advice, that no one is an at-risk individual that may be actually being scammed. So quite often, it's not the scammer, it's the person being scammed that we want to protect.
Definitely, 100%. And it's not something new. It happens in the traditional finance world, and it's definitely happening more often than you think around you in the crypto space, definitely.
Yeah. I mean, it's sort of target for a lot of organizations. And I think that was one of the first things on the job. DJ was already here when I joined Day 1X, and I was like listening in on all the evil people in the world that are trying to take advantage of a monetary system to essentially launder money.
Yeah. Listening to some of the calls, working on some of the cases, it's quite sad for the victims, really, because it could be their life savings, and it could destroy lives. The consequences are very high. Of course, we don't want that to happen to them, and we build a system, in line partly to satisfy what the regulation wants, but also to protect our clients for their interests on our platform and service.
Now, that's sort of why we do it. Let's talk a little bit about compliance in this country in general and the Australian government's outlook on it.
Yeah, so I think overall, crypto in Australia, regulation-wise, is in a very interesting phase right now. So as most of people who are in the space or should already know, is there's been a lot of improvements or progress made on crypto regulation over in the US, in MICA, EU, even in APAC, where the center of attention seems to be on Singapore and Hong Kong. Australia seems to have taken a backseat.
So they had that summit. Did anything happen?
There's a lot of consultation, discussion, feedback from industry peers.
I'll take that as a no.
But it's always a work in progress. And they started off this token mapping exercise a long time ago by crypto standards. But right now, because of all these pressure and things ramping up overseas, Australia is making progress as well. So currently, it's too easy to set up a crypto exchange from a licensing perspective because you don't need to have a license. All you need is to have a registration with AUSTRAC, which looks after AML and KYC. That's looking to change very soon, towards the end of this year or early next year. The government's looking to mandate licensing requirements for things like crypto services, custody, and staking. And what that means is once those rules pass down, if you don't have an AFSL license, you can't go beyond the normal spot products. And right now, we've deliberately chosen to just offer spot products because when you're offering leverage and margin products to retail clients, there's a high level of risk. So we just prefer to stick and focus on the safer option for the time being.
And sort of be ahead of the curve in that case. Like we think that's coming, so may as well prepare for it now.
Definitely.
I think you made a really interesting point. It's that at the moment, it's really easy to start a crypto exchange. But it's hard to get banking, like you said earlier. So we're almost self-regulating and self-doing compliance checks, the industries that are working with one another, because it is hard to get banking rails. It's you have to jump through a lot of hoops to get a banking provider to. So while you can set up an exchange, actually functioning like a business is really difficult.
Yes, definitely. So banking still, unfortunately, in Australia, for the most part, treat crypto-related services and products as super high risk. Unless you have super tight compliance, top tier level security, they're not as willing to do business with you in that regard. And what that means for our clients or everyday clients is you can't deposit from your bank account. They'll lock your account when you try to attempt to deposit and buy crypto, and vice versa.
I think we've all, it's happened to me. I've got my bank, who shall remain nameless, Westpac, is happy taking my wages in, but will flag anytime I use Apple Pay to deposit on the exchange. It's just, it's an absolute nightmare.
It's happened to myself too. I try to deposit some from my bank account. I got a notification my account was frozen for suspicious activity. I called up the bank, spoke to their risk team, explained, I work for this exchange. I actually work in compliance. I'm like, sorry, this is a blanket rule. So it's just what it is.
And it's not just against us, it's against crypto. It's
Correct.
Nothing that Day One has done. They just gone, okay, crypto blocked. Do you think there's a little bit of fear there with the, it's a shift in finance and the big four trying to really hold on to the market? Or do you think it is compliancy? Or, we always, when you get into the darker recesses of the crypto web, there's that conspiracy, right, of they're just trying to stop us because they're scared and we're going to,
I'll say 50-50. For one part, definitely it's a conflicting interest, right?
Yeah.
Traditionally, even if without crypto, going back to the days where everyone's handling cash, to now everyone's going on credit or cashless. You have money saved in different environments away from the banks. And that's how the banks make money. They take your money, they loan it out at a higher interest rate. And then you introduce crypto, which is very anonymous in terms of the blockchain activity. You can't trace who it is unless you have an account with a verified provider, provide KYC. So it's super high risk. And it's also because crypto can go borderless quite easily compared to traditional banking methods. So they're treating this very carefully and they're very selective in terms of who they partner with for crypto-related services. And again, that's why it's important as an exchange that we have all the right processes that not only meets regulation, but we're trying to balance it so we're not over-engineering to blocking client usability. You don't want to be, building a castle for rules that might never came, but at the same time, you can't wait for the rules to be there and then act. But then by then, it'll be too late.
Look, and there is sort of like that trying to build the brand and build the platform. I remember when I joined, Phil was like, if David doesn't hate you, you're not doing your job right. So, you know, we try and be as lenient and flexible and assist people onboarding and trading as much as we can. But then when the flags are there, we need to pay attention to them pretty quickly.
Definitely. We jump on these cases very quickly. Each client is important. Doesn't matter whether your transaction size is 100,000, 1,000, or even $100, or even $10.
And for us, like if someone does get scammed, the size doesn't matter. Like in regards to penalties for the exchange.
We treat each case, equally in terms of priority. And as an exchange, from a reporting perspective, we have to report certain activity that are suspicious, that's possibly related to fraud, scams, or at the extreme end, terrorist financing.
Yeah.
There's very strict guidelines and timeframes that we have to report to AUSTRAC. And that's why we do reporting and collect these type of information.
We had any terrorist funding?
I can't say.
We say anything?
We've
had some interesting, there's been some interesting not really criminal, but seedier industries that have tried to sort of use us to launder money that we put a stop to.
I guess what I can say is there's definitely, I guess for lack of a better word, syndicates that try to do all sorts of things. Whilst we might not have all the information to verify, down to the specific person or group, but you do see some similarities and activities on the transaction side and on the blockchain side, when they try to break up a huge transaction into smaller funds and then funneling into one particular wallet that's anonymous. It does raise questions, and things like that is where compliance steps in and add an additional layer of, the compliance lens and apply the risk measures.
And so we also apply risk measures to the transactions. We check the wallet that it's going to. So it's not just the KYC process. We try and make sure. And I like this one the most because quite often we'll get, especially at-risk demographics that maybe receive a phone call and get told to transfer some money somewhere and they think it's a legitimate investment opportunity. They'll try and transfer something and our third-party provider will flag that the wallet that they're going to is at risk, and then we can call them and be like, hey, listen, there's been fraudulent activity to that wallet before, do you know what you're doing? And so it's not only KYC, it's also KYT.
Yeah, definitely. So apart from KYC, which every user experienced when they initially join, there's also a ongoing component, which is the transaction monitoring. It's not only to protect you in terms of where your money is going or if your money is getting stolen, but it also protects the system where we have all these data and we're able to use this data to advantage to hopefully mitigate these things from happening before it occurs to you.
Yeah. And I think for me, prevention is the key thing with that type of stuff. And then we can, like you said earlier, like when someone goes, I think I've been scammed, like that sucks. It's a crappy phone call to have. And luckily it hasn't happened for a very long time on day 1X, but it's one of those ones you go home and you tell your partner, like, oh, someone's crying on the phone. Like it's a tough one.
It is. And you do feel a lot of empathy for these victims. And unfortunately, I guess, as a crypto exchange, if it's not in our environment, your money's gone out, your crypto's gone out to a wallet that almost no one has no idea where it's gone to. There's not much we can do from our perspective. Unlike banking, where it's a bit more traceable, they have a bit more power.
And with banking, they can get the money back somehow, right?
Correct. There's facilities such as chargebacks. There's other mechanisms involved, and because it's a bit more traceable, you can actually find where the money is and try to get it back from its source. Whereas crypto is all on the blockchain. It's designed to be that way, that it's anonymous, and I think it's great. But there's always a caveat, and there's two sides to the story.
I think that education just hasn't caught up to it for a lot of people. And when you do get these scammy phone calls or scammy emails or letters or things like that, and there are a lot of people out there, like it's a massive industry, right?
Correct.
Scamming.
And I think you mentioned a really good point about education where, the general public might not be equal in terms of the knowledge of how crypto works. Most people think of crypto as Bitcoin. But that's just one of the many tokens that's available you can buy. Blockchain and crypto are two different things, but they're often mixed and confused to be one and the same. And this even goes beyond to operators in the space, in exchanges, other big companies. There's no doubt there are always people even in the industry that are not crypto native, because a lot of them, not long ago worked in traditional finance and banking.
Yeah. Yeah.
So if it's even new to them, it's even newer to everyday mum and dads, and that's unfortunately where these scammers target, especially seniors, where they're not very literate in terms of, the financial literacy is a bit lacking, and that's where they target the vulnerabilities.
Are there any regulations or anything coming up in Q4 or Q1 that you're aware of that we should be aware of?
Nothing concrete. There are some proposals that's still going through discussion and consultation at the moment with ASIC, who looks after the licensing part of the regime. But what I can say is Australia seems to be taking a cautious wait and see sort of tactic compared to the rest of the world, which might be smart. But at the same time, you have to pick a lane soon, because you don't want to be left behind.
Yeah. Yeah. So we see the US is always in the news, Europe is on the news, and APAC, like you said, and it does seem like Australia is kind of a little bit on fashion for Australia, right? You kind of wait and see for
Australia usually, on most parts, follow what happens in EU and US, because they're the biggest market. They're a bit more mature, and their regulation always is at the forefront on the innovative side. And I think if you were to look at the US as an example, we've got a very pro-crypto president in power at the moment. They're trying to push for stablecoins, and they want to become the dominant player in this space. But at the same time, the regulators and the regulatory bodies over there, they're all fragmented. They have different thoughts on how they want to implement this. Whereas in the EU, in contrast, they have a very mature framework already in place, which is good for business and banking and getting that relationship going. But at the same time, the burden on the regulatory burden is very high for these operators. So what that means is it sort of kills and pushes off innovation. It's too costly to set up crypto-related services for small and medium-sized.
The licenses in Europe are massive, right?
Yes. I think this also somewhat represents the fundamental legal structure that these regions operate on. So in Australia, for example, we operate on common law. And what that means is generally we operate on precedents and findings from new case rulings, and that's where rules are created from. And from a day-to-day operation perspective, you have a general guidance on what you can and can't do, but it won't specify down to the dotted line to what you have to do specifically. So that gives you a lot of room to innovate.
Yeah. That was really interesting. I remember you told me across the street the difference between we operate in common law and the US operates on...
Correct. And then you got US and then EU operating on civil law. And in EU, as a good example, they're very particular on things. It's, to the line 1, 2, and 3, you get this right, it's a tick. I think
It's very German.
It is. I think one of the recent one that still sticks to me is with iPhones. Previously they had their own proprietary charging head, the Lightning, and now because of EU, they've forced everyone to go on USB-C, and now we have USB-C. I'm thankful for that, but that just shows the power and how detailed they get down to in terms of regulation.
I remember when I lived in Germany and I was in the car scene, it was here you have a list of things that are banned and everything else is kind of okay. In Germany, it was like a list of car parts that were allowed. It wasn't a blacklist, it was a white list. And if it wasn't on that list, particular set of rims, particular spoiler, modifications, exhaust, if it wasn't on that list, it was banned. It was sort of like the complete other way.
Yeah, it is like that. And Australia just seems to take it, they create the set of rules, the frameworks, and hopefully the participants or the players in that pond do the right thing or try to do the right thing. That provides flexibility, but at the same time, it creates confusion because as an exchange, it's like, well, how far do I need to go in terms of compliance to satisfy your requirements, right? Because I mentioned earlier, you don't want to over-engineer the compliance or KYC process so much that you push away clients or you create a very bad client experience during the
And we
onboarding
explore that
phase.
balance all the time. Like we're constantly tweaking and modifying to try and get a balance between safety, compliance, and also ease of use.
Yeah, it's a delicate balance, but it is definitely on our minds on the forefront when we're designing new processes and changing things up.
Overall, you think Australia is doing the right thing, or like how would you like to see it?
I would like to see regulation picked up a bit faster, concrete. I think that's what Australia really needs to get this going.
More of a leadership.
More of a leadership. There's already been a lot of developments overseas, and I think there's plenty of examples that Australia can consider when they're designing their framework. But yeah, I think a lot of players in the industry are on the sidelines just waiting for this to occur. I'm not only talking about on the crypto side, but also the banking, the merchants, the payment providers, they're all waiting for regulation to come in. And once things are finalized, we can finally get this ecosystem going.
I have conversations with tech partners that have products that are ready to go, and it's literally just we're waiting for compliance to catch up, we're waiting for regulation to catch up to know whether or not we can execute, we can deploy, we can sign you. It's pretty interesting. But I think a lot of people are developing now. A lot of companies are developing products with the hope that things will come in and they're first to market.
Yeah, I'm confident something will come along, and I think the outlook for the market overall, crypto,
It has to, right?
it has to.
the cat's out of
It's
the
too
bag.
big to fail
Yeah.
right now. I think you mentioned earlier, is there a sentiment where the banking industry is against crypto because there's conflicting interests? And I think, when crypto started back in the day, no one knew what it was. They thought it was a Ponzi scheme, a pyramid scheme. And fast forward to today, almost a decade later, it's so big that you can't ignore it anymore.
Yeah. But there's legitimacy.
Of course.
And then there is that Ponzi scheme, Kiwi Swap. I'm looking at you. Bloody, I can't wait for the rug pull on that one. Did you watch the episode about Kiwi Swap? So it's this project. It's like a DEX DeFi project. The whole roadmap is coming soon. There's absolutely nothing. They got some influencers to shill it. There's a 5% tax on any swap. So you buy it, and then if you were going to sell it, you're going to get penalized 5%. Right? It has to go higher than 5% to make any profit. So no one sells, and it just feels like a massive Ponzi scheme. Yes, I got suckered into it.
Yeah, I have to put my hand up for that one too. I was a victim of scams, pump and dumps. I've experienced it all as a trader myself back in the day. And I think
Name and shame. What were they? Safe moon.
It's very unfortunate that's still a chunk and part of the ecosystem.
Yeah.
And that's where, again, regulation comes in, everything will standardize and will hopefully root out and minimize the harmful impact that these people do to the ecosystem. And the reason they've been so impactful in a negative way recently or in the past few years is because of lack of regulation.
Yeah.
Government wants to step in.
Well, that's what it is. Everyone's like, oh, it's too regulated now. It's against what Satoshi wanted, and this is horrible, and freedom. And then they get rug pulled, and then they're like, how did this happen to me? Well, you kind of that's what it is.
That's right.
Everybody wants to be a gangster until it's time to do gangster shit. Now, we talk about crypto quite often, so not just regulation, and we were touching on different markets yesterday. I think you said, I can't talk about it, but I'm going to put you on the spot anyway. I think China's a massive opportunity.
Yeah, I think with all the news happening around the world, one major player, or a sleeping dragon, I would say, would definitely be in China. I think it was quite a shock back in the days when China announced that they would ban crypto. But if you were to do a quick search on the internet, there's still a lot of crypto enthusiasts in the country, and there's still a lot of activity operating the gray zone coming out from China. And I think with the stablecoin push coming from
and obviously
the US,
that's like extreme regulation, right?
Correct.
Like the reason it's banned is like that extreme of what we talked about, where they want to control everything just by the nature of the way that the government is structured.
Correct. And also because of the huge AML risk involved. They don't want money to flow out from the country in a way that's corrupt or or triggering any suspicious activity. And that's just by design because crypto is just so easy to cross border.
Can they currency trade in China? So they can't even buy like US dollars. So this would be a way where they could buy stable coins and out into
No, that's
USD?
not there's no legal avenue of doing that.
Yeah, so this would be a way to circumnavigate that.
Correct. So what's happening recently, I guess in the last 6 months, there's been a lot of activity is the US is pushing for stable coins because he wants to become the dominant player in the digital space, like it has been up until recently with the dollar. And China seeing this as an opportunity, don't want to lag behind.
Yeah.
They want to do that themselves. So, and because of, I guess, the sensitivity of banning crypto in mainland China, they're trialing this through Hong Kong. And if I were to take a guess, if Hong Kong becomes successful, yeah, it looks to be successful at the moment. I think what China sort of lacks behind in terms of where the world is for crypto is because they've been so out of the market. There's a lot of catch up they need to do in terms of understanding the technology and what they can do with it from both the usability perspective as well as regulation.
Yeah.
And yeah, I would say if Hong Kong was successful, why wouldn't they bring it to China? But of course, there'll be a lot more tweaking involved in terms of
do you
the
think
design.
it'll be something that's released to everybody, or it'll be heavily regulated so only the upper class can, like access it? Because that's sort of like, I don't want to get too political, but that's what happens in communism. I mean, product of Polish communism, so sort of understand it as well. And having worked in Vietnam as well, there's a difference between the upper part of society is allowed to do versus what the people are allowed to do. So do you think in the spirit of crypto, or do you like it'll be allowed to everyone? Do you think they can even keep it, or do you think like once the cat is out of the bag, the cat is out of the bag? Or is that the discussion that's in play now?
They're probably,
hard question.
Yeah, look, I don't know exactly what they're doing. I'm not in those discussions. But if I have to take a guess, I mean, ideally, it's open to everyone. That's how it should be. But for us to get to that stage, there's a lot of process that needs to be ironed out. Even for Australia, which has been part of the game for a long time, although not taking the lead. But yeah, it's hard to say. I think there might be phased rollout, so it might not be for everyone from the get-go. It could be, like you say, sophisticated investors.
I think they'll have to do like their own blockchain, their own KYC, their own token, like everything really siloed.
Everyone wants to do their own, but sometimes making your own isn't the best way to do it. But yeah, China is in a really good position to take advantage of this, just because of the size of its economy. It's a huge market, so if they do open up, it's going to be, bull run, no doubt.
That's what we were saying. I think like right now we're looking at the US ecosystem as the niche to sort of really invest in. But I think I'm really trying to and it's hard. It's hard for a Westerner to research because it's what those Chinese projects are, and I really want to invest early in that because I think it's a boom. Also, as quite often I say, I believe in the blockchain technology as well. You touched on it, like it's slightly two separate things. But I believe China can do really well with blockchain technology for, the automation of building, BYD, all of the industry coming out of China, factories. Like I think that is the perfect use case for blockchain-based, ledger-based logistics. In a country like China, where it's so frantic, it's so much going on. If you can really track it, automate it, and get efficiencies out of it, I think like if we can make it work there, it's going to work everywhere. And so I'm sort of like, from a tech enthusiast, I'm really interested to see. Like imagine like you're Apple, you're building your iPhone in China. Everything's tracked on the ledger. You can see everything. You can see the hours. You can see the parts, where they are, where they're going. Complete non-fungible. I think like that opens up massive opportunities for logistics and efficiencies in all tech frontiers, and evens the playing field a lot as well.
Yeah, definitely. It's interesting that you mentioned tech because right now AI is all the buzz, and there are definitely.
And we saw what happened. That's actually a really good analogy. We saw what happened when China stepped in with AI. With DeepSeek, and how it just blew everything away. So imagine now
if they were to step into crypto. Yeah, big impact. I was going to say, with that AI, there's one crossover concern, I guess, out of the many possibilities with crypto is smart contracts. You give it a command, it runs on a set of rules, and once they're triggered, the smart contract is executed. Now, traditionally, these commands are done from humans. Now we've got AI, and AI is becoming more human-like every day. It's advancing very fast. So one of the near future concern is how would the smart contract identify if this command is coming from a human versus an AI?
Yeah.
And that could be both from a good thing and also potentially risky for if you're a hacker, for example. So there's a lot of things to consider. It's not just purely the blockchain technology itself, it's also with the ecosystem and supporting tech such as AI.
Swinging completely separate, another direction, real world assets. The compliance of real world assets, like can I sell my house wrapped in an NFT?
I wouldn't
I remember
say,
last
Yeah.
one, there was like someone that did it, but let's that was a news story, right? Like, are we there yet? Is anyone in the world really there yet, apart from clickbaity news items? Is it possible in Australia? Do you see that happening? I think it's a great use case. Like,
there's a lot of good use cases, and I think with that example, I haven't seen any yet, at least obviously it's not mainstream, but I would definitely not say that it's not possible. And if it becomes a reality in the near future, it'll come a lot quicker than what a lot of people might think. And I think this again goes back to the government trying to set regulation for these things. One of the pain point is, as a regulator, they're not even too sure how to classify these new products.
Yeah.
Let alone you're an exchange and trying to take first mover advantage. When you build a new product and you have a crossover with traditional finance, it's like, well, where does this sit regulation wise? No one knows. So it's like you try to do risk mapping.
not only with the risk mapping, exactly. Not only what is the actual process of selling your house as an NFT, but as soon as I mentioned it, I'm like, okay, but what happens if I lose my wallet keys? Have I lost my house? Like, we see that guy lost all the Bitcoin in the dumpster, right? That sucks because there was a lot of Bitcoin.
Definitely.
But it also would really suck if you lost your house.
Yeah. So I think when that crossover happens, once there's a few successful cases, people jump in very quickly. It's like just business in general. If there's a big slice of cake there for the grabs, it'll become saturated very quickly. And things will move a lot quicker once regulations are in place.
Okay. So what are you bullish on? You're an investor as well. You do stuff in traditional finance and traditional investment, traditional. I can't wait till the week where I can stop saying traditional and sort of crypto becomes traditional as well. What are you investing in at the moment? Where do you see the opportunities?
I'm very big on Ethereum because I think, unlike Bitcoin, Ethereum has a smart contract capabilities, and that just brings its potential far greater than what Bitcoin offers. And I also hold a handful of other meme coins just for the fun of it.
Really?
Yes, I think.
What memes? What are you holding?
Pudgy.
Pudgy penguins.
Pudgy,
We're
yeah.
big on Pudgy penguins in the office. That's right.
Yeah, it's coming up to be, a reoccurring news headline here and there. And I think, and the way I go about it is the meme coin make up a very small percentage of my portfolio just to gain that extra alpha. But yeah, majority
And the
of
rest is ETH.
Yeah, the rest is ETH for me. I don't have as much time as I wish I can to spend on trading. But yeah, I think ETH is a pretty good bet.
And for you, it's a long-term hold.
Definitely.
Like with ETH, with the ETH Foundation, how does that play into compliance? Do you think that these really massive projects have a say? Like, do they have a seat at the table now?
I'll say yes, because as you can see with the summit, right, and all these discussions and consultations that the regulators are gathering feedback on, it's not just gathering from the big exchanges; it's also gathering from entrepreneurs, enthusiasts, those who want to sit on, start a project of their own on either Ethereum or another chain. And that's what you need to keep this ecosystem going. And I think it'll be foolish if you're not trying to get them to weigh in on what their thoughts are, especially when, this is new for everybody. So I think it's important that all the participants come into the space with an open mind.
You did your MBA recently. You went to Singapore for that. Is education, do you think, ahead of compliance in crypto or playing catch up as well?
Bit of both, I think. Education is quite good in terms of introducing people to the basic concepts and then scale up from there. I think Singapore is very uniquely located because of their geographic location and being a finance hub. They have to push for innovation, and they're very big on AI and crypto.
Okay. Cool. I think that's everything. That's all the questions I had. Did we cover everything that you wanted to cover? Everything?
Yeah, I think that's a pretty good coverage of the compliance side. But yeah, maybe a question for you. From the growth side,
No one's ever asked me a question.
where do you see, or how would you balance crypto growth versus compliance when you're working on a new product? What sort of comes into your mind, if any, when you're thinking of new ideas?
Look, it's a really difficult one to answer because I come from a startup world where the ethos is sort of like break it, do it, and ask. Like it's better to say sorry than ask permission type thing when you're really trying to push a startup. Obviously, crypto is a lot different because some people's life savings are at risk. So you do have to take a more cautious approach. And there's been a lot of great ideas, I think that are great ideas, that I've wanted to do and gone to you and be like, forget it. Like stocks on the exchange, right? And those types of things. So there is a constant, hey, I've got a great idea, can I do it? It used to be from a startup point of view, I've got a great idea, can I build it? Now it's like, can I build it and am I allowed to do it? So I think there is a lot more restriction and uncertainty, which is why we need a compliance person to be able to run these ideas past first. So I think it's a little bit tricky, especially in Australia, to really try and be innovative. I think that's from a product point of view. I think from a growth point of view, we touched on it, it's the education piece more than anything. There's still trust that needs to be built. There's still people still need to know exactly what crypto is. A lot of investors don't. We've had investors that have sort of come on and deposited funds and bought USDT and then like rang up later and going, I thought I bought Bitcoin. Why hasn't it gone up? And it's like, we've bought a stable coin and we're sorry. And there's that education piece. And we take learnings from that and add things to the knowledge base and make sure people sort of know what they're doing up front. But I think the biggest thing is the growth piece. Australia is also a really small market. And to be honest with you, from a compliance point of view, we're really restricted with what we can do. Like we can't do margins, we can't do derivatives and all the attractive things that people want to do on chain. And I think for the industry, what that means is we're seeing a lot of people that would be spending money with Australian businesses and Australian exchanges going to international exchanges to do that. So essentially what China's worried about, money's flowing out, right? They're going to Bybit where they don't have to KYC. It's dangerous. They can get scammed. Those exchanges can go under. There's really nothing that protects them. Look what happened with FTX. But they're trading their margins and perps and things like that there. So we're losing money as an industry. So it's sort of like, I think there's a lot of talent in Australia, but you only have to look at what the most innovative projects out of Australia have had to put up with. Immutable X have had to, go overseas and get registered and things like that to really be competitive on a global landscape. And so I think from me, like, I completely hear everything you said about safety and compliance, and I realize why it's there. I just get frustrated with how slow it is because I think Australia does have the massive opportunity to be a leader. Australia's trusted. Like you go anywhere else and you go, I work for an Australian exchange, people like they trust it that it's safe. But then we lag behind a competitive edge. We don't have a competitive edge on the global scale.
Definitely. That is, one of the problems. And hopefully Australia seizes this opportunity this time around. And if it does, I think it'll be great.
I think it has to. I think that, this bull run's probably going to end in Q1, and then I recommend shorting after that. And I think trading, I don't think we're going to see a massive crash anymore because of all the regulation and all the industry sort of like propping up the price of Bitcoin now, right? It's like they prop up the price of oil and USD. So I don't think we see a massive crash. But I think Australia really needs to get its ducks in a row for the next bull run. Because I think the next bull run, more than anything, It won't be memes. It'll be utility. It'll be games built on the blockchain. It'll be real world assets. It'll actually be businesses. Like I'm very bullish on Chainlink because it's a business. AVAX because they've got the AWS as a business and real revenue. And I think those tech innovations are happening overseas. And so I think if Australia doesn't create an ecosystem where companies here can flourish and freely create and freely innovate, they will go overseas, and Australia will lose a lot of talent, a lot of opportunity, and fundamentally like a lot of money. And that's going to suck for the country. That has a ripple effect, right? You have billion-dollar industries. Like, we prop up as Aussie entrepreneurs, we prop up like Atlassian and Canva, right? Imagine if they had to go overseas.
That would really suck.
That would have sucked, right? And that's what's happening. I guarantee you, anyone in the government listening now, those next companies are being built now, and they're being built on the blockchain or with AI, right? And I think a lot of what I'm saying applies to AI as well. I think they go hand in hand. And if we don't create ecosystems where they flourish and can get access to funding and don't have to do things in secret and then don't have to get, registration in Panama or something to do something, then we are going to lose that talent, that business, and those opportunities. And once that ship has sailed, you're not going to claw it back. You're going to be playing catch up, and we're going to miss the massive next tech boom.
Definitely, that's 100% correct.
That's nice being asked the question. Cool. Most importantly, how's the coffee?
Very good. Got almond cappuccino. Can't complain.
That's the difference. I got almond. When you bought because I get oat normally, and I was like, something's different with this. Like it's a little bit more watery. But apparently almond's better for you than oat.
Yeah, more healthy.
Healthy.
On the nut chain, it's the most healthiest, apparently.
I think macadamia is better.
Well, I don't know how you incorporate that into coffee.
Did you have, when you were in Singapore, did you do pistachio milk?
I did.
Speaking of Australia, can you get on the pistachio milk, please?
We need that here.
We need that here. Like, what? Like, throw everything that we just set out and just give me pistachio milk and we're happy. Cool. Thank you very much for tuning in. Sorry it's a little bit different episode, but I actually think this was great, and I would love to do this with you regularly as things develop, because I think these are the long-term discussions that need to be had to propel things forward.
Definitely, and I think we need to have discussions like these, not only us but others as well, as more often as they can, because this is how you propel the industry forward with new ideas and thoughts.
We're still a small industry, like we're still
correct. We're very small in the whole world of things. But yeah, I think we're, like you said, uniquely placed with the level of trust to build something great.
Cool. On that note, thank you very much, and work out how to join you guys next week. It might be a sort of side-by-side, one of those boring podcasts, because I'm still overseas if you're watching this. Thank you very much. Like, subscribe. Thank you, David, so much for joining us.
Thanks for having me.
No worries.